Welcome back. The U.S. labor market continues to grow. Employers adding 390,000 jobs in May, according to the latest jobs report. The numbers are better than expected, despite fears of an economic recession. Joining us now to break down these numbers and talk all things economy is Jesse Wheeler. He's an economic analyst with Morning Consult. Thanks so much for being here with us tonight. So this was a stronger than expected jobs report. What are the big takeaways in your mind in terms of people who left the labor force?
That's right. So we saw another strong jobs report on Friday, as you mentioned, 390,000 new jobs. Unemployment remains steady at 3.6%. And the report also showed that more Americans are returning into the labor force, which is a very positive sign considering labor shortages that have been persistent across the U.S. And also wage growth is beginning to ease somewhat. And however, considering where inflation is right now, this should be seen as something constructive and intentional as the Federal Reserve's monetary tightening and raising of interest rates is starting to take effect.
So you think it's working?
Mm-hmm. Starting to.
And why is the demand for workers remaining so high? I mean, hasn't unemployment and pandemic relief run out at this point? Where are all these workers?
So demand for workers is still high because the economy is still strong. So despite high inflation and talk of a pending economic slowdown, the labor market is still humming along. Firms are attempting to staff up and to meet this broader demand for goods and especially now services. And there are relatively less workers than there were before the pandemic, especially in certain industries. And this is making it very difficult to meet those staffing requirements. So demand is still strong for workers.
Where are all these workers going? Did they all start their own businesses? Are they independently wealthy now? Like, where are they?
So that's the big question. As you mentioned, that pandemic era relief that we saw is gone. So it is difficult, and those who cannot, afford to stay on the sidelines are obviously returning to the situation. And also the prospect of higher wages are starting to bring workers back in. But the pandemic brought a big change, disrupted all of our lives, especially the way we work and perceive work. And it's just taking some time for people to adjust and shift around and find those jobs and match up. And then also to re-enter the workforce, but that improvement in the labor force participation rate should be seen as a real positive.
And so people who are in the job force right now, employees, you say they have unprecedented job security right now. How so, and how should everyone be making the best of that?
The labor market is historically tight right now. Employers are struggling to find and retain workers. We saw in the JOLTS report this past week that the layoff rate fell to a 20-year low in April. And our data here at Morning Consult confirms that each month we're surveying over 1,000 U.S. workers to ask them, whether or not they expect potential employment income loss over the coming 4 weeks. And that also fell to a series low. So it's the lowest level it's been in the 2 years since we started collecting that data.
So when we look at the overall picture of these seemingly conflicting factors in the economy, is it good or bad overall? Because wages aren't keeping up with inflation, right?
No, wages are not keeping up with inflation. Nominal wage growth is very strong at 6% in April, according to the Atlanta Fed. However, inflation is 8.3%. And as prices continue to outpace those wages for a lot of Americans, then that's going to erode purchasing power and for U.S. consumers and who can afford less with each dollar that they're earning. And especially since, food prices and gasoline are, a big factor in those rising prices, that it's going, because those are real staples and you can't really afford to, buy anything else, or there isn't anything else that you need that. So that's going to, really impact, low income households especially.
What is the jobs forecast in the coming months?
It's still very uncertain, but the consensus forecast amongst economists is that job growth will continue, albeit at a slower pace than what we've seen over the last 6 months. So we're not going to see those kind of like blockbuster 500, 600,000 per month net job creation. However, the expectation is very much that job growth will continue and be a real positive for the economy over the coming months.
All right, Jesse Wheeler, thank you for your time tonight.
Thank you.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.